All right. Well, it's a beautiful Tuesday mid-morning, and we're here checking in with our Facebook community, and we have Jeff Tucker in my office. Jeff Tucker, for those of you who don't know, is a local lender in the Decatur, Macon County community with PNC Bank. He has a lot of years of lending experience and has worked with a lot of our clients and helped them get pre-approved and closed on their home.
I've been in the lending business for about 6-7 years now. It's been a great experience. My goal is to always help the customer get into the best product for them. So,
excellent. And that's something we just want to check in and just have a few conversations, just a quick conversation about the overall lending process, what the current lending market looks like. Those of you that follow the news, you probably see a lot of headlines. Rates are low, so we'll get into that. But overall, how does it work when someone approaches you? I know from our end as realtors, most times when we get a call from a new customer, potential client, we like seeing a pre-approval letter prior to going to look, just to make sure we're looking at the right houses in their comfortable price range. But how does that look like with you? So if someone approaches us, or if they walk into your office and they're thinking about buying a house, what's the best way to start on that?
So I ask two questions when I first meet with a customer. I want to know, what is your target payment? So what's your comfortable payment? If you are, and not even so what are you comfortable with, but you're writing a check to your mortgage company, what's the most you feel comfortable writing a check for? And then what's your target price range for house? Because you could be looking at a house that you say, oh, we want to look at houses under $200,000, but we don't want our mortgage payment to be above $800. Well, you're looking at two separate markets here. So we need to figure out what that looks like for you. And that kind of helps me narrow down the field of where we want to do a pre-approval for. Then from there, what we target is we do a full pre-approval, as opposed to most other companies are going to do a pre-qualification. With the pre-qualification, there's no underwriting aspect to it. We're taking you on your word of this is what you make, this is what your credit looks like, and they'll pull a credit report. They don't necessarily have to. And then they'll price it out and say, okay, based off what you've given us, we think you're pre-qualified for this amount. But there's no substance to that. There's no definitive, yes, I know for a fact my credit and income are approved. Whereas with a full pre-approval through PNC, you are credit and underwriting approved by an underwriter. So your income, your credit have all been looked at. They've all been processed, and we say, yeah, based off the credit and income, we think this is good. Now we just need to find a property that fits the criteria that we've already pre-approved you for.
Excellent. And then that's where we come in as your realtor, of course, is finding that property and honing in on a property that matches your features and amenities in your price range. Well, that's excellent. So that way they know that we don't get to an offer stage where we find the house and then they might not be pre-approved because something comes up.
Yeah, too often in the time you'll find that you're 2-3 weeks into a process before the underwriter even really gets to look at the file. And then you have all of these conditions that the customer then is having to scramble to try and help alleviate all of these concerns, and then a deal could fall through. Whereas if you were pre-approved in the beginning, you're never going to miss a closing. I've never had a loan not close since I've been doing the full pre-approval.
Awesome. That's excellent. And obviously as realtors, that's what we want for you, our client, is you don't want to get already into a home inspection stage or anything like that and then find out that you can't actually purchase this house. So that's excellent that
it's money out of your pocket.
Right. That's excellent that Jeff over at PNC does the full pre-approval process. That way you know once we make an offer that that'll be your house, we're going to get you to closing.
Yeah.
What about the types of loans? Obviously, if no one's been through the process before, there's probably a lot of first-time home buyers out there listening. What type of home loans do you specialize in? What do you recommend?
So we can do a full broad spectrum of everything that's available. So technically there's conventional loans, which would be Fannie Mae and Freddie Mac, but for the purposes we'll just call them conventional loans. Then there's FHA, which is the Federal Housing Administration. A lot of people think that these are first-time homebuyer loans, but they're really just a government-backed loan. So the government isn't funding it; they're insuring you as the buyer. Then you have USDA, which are U.S. Department of Agriculture, or rural loans. Those really apply to an area outside of the Decatur market. So if you're west of Nyack area, west of Nyack, if you're south of Elwyn, north of Forsyth, and then east of basically Richland, you technically qualify for USDA. USDA are 0% down, something to really help stimulate an agricultural economy.
Community.
Yeah, but you
Okay.
can't be on a farm per se. It can't be income producing. And then you have the VA loans, which are for veterans, and those are veteran backed. The big thing with VA loans is that if you're going to be a borrower and co-borrower, they have to be considered married. The VA, and that's a VA policy. It's not a PNC policy. The VA stipulates that veteran has to be the primary borrower, and the co-borrower has to be married to the veteran. That's
Awesome.
That's a big thing.
Very good. So obviously Jeff is well informed on everything. So if you're a veteran out there and think about buying a house and VA loan,
Yeah.
Jeff would be the person to go see and ask, along with the conventional FHA.
We do them all.
Absolutely. And that's what's nice about working with PNC is they're a larger institution, so
Yeah,
they have some capabilities of that.
And we keep all the loans in-house, so if you do a loan with PNC, you'll make your payments at PNC. You'll be able to talk with me at a local office. Everything is done through me right here now, and it makes the process a lot smoother, because you're not going to have to worry about then tracking down, okay, who did my loan get sold to? Who am I making my payments to? And that makes the process a lot smoother.
Very good. So how does that usually work? How do you size up the right loan program for the person?
It's all about talking through it and figuring out what it is you want to do. What does your credit look like? What does your income look like? What's your down payment? You know, I ask, what have you done to prepare for buying this house? Are you drawing from a 401k? Do you have money saved up? Are we getting gift funds? I mean, there's all kinds of options and ways to think outside the box to help you fit. It's a matter of what's going to be the best rate, what's going to be the best payment option for you. And sometimes the lowest rate isn't the best rate. You know, you got to look at it from a standpoint of statistically, you're in a home for 7 to 10 years before you've either refinanced or moved. So then to say, okay, well, if a 30-year rate is the best option for me, it might not be the lowest. It might be that it's the lowest payment. Something that keeps you the most liquid.
Awesome. Well, for those of you just tuning in, we touched upon the pre-approval process. We should probably introduce ourselves again. I'm Zane Peterson with Main Place Real Estate. Jeff.
Jeff Tucker with PNC Bank.
And so we touched upon the pre-approval process, why it's important to talk to a local lender, and then types of loans available out there. How about closing costs, Jeff? From a realtor perspective, I know most times if we're working with a mutual client that you have pre-approved, you'll let me know when we get into that offer stage, hey, they're going to need some closing cost help. And as a realtor, I'm able to usually negotiate that into the closing. And sometimes that might be offset by paying slightly more for a property. But if you're paying slightly more for a property and they're covering some out-of-pocket expense for you, that can break down sometimes where maybe your payment will be an extra $10 a month, but if that saves you $3,500 out of your pocket in today's cash, that can make a difference.
Yeah, you know, so you can look at it from a standpoint. We charge $500 as an origination fee. There'll be another, usually $575 for the appraisal and credit report, and then everything else built into your closing costs are title company fees. Those can be anywhere from $900 to $1,500. So you could be looking at a total closing cost of anywhere from $1,500 to $2,500 just in closing costs. So if you're one of those people who, you know, you have the down payment saved, but you might not have tons of extra money, asking for a closing cost credit can really help out to say, hey, you know, we want to ask for maybe $2,500 to offset that closing cost. If you have to pay an extra $2,500 on top of your agreed upon sales price to do that, the difference in payment, it's not going to be substantial. You're talking $5, $10 a month, whereas you're saving yourself the money up front that might actually be what gets you into the house in the first place.
Excellent. So that's something obviously we work through, and it's nice working with a local lender that we can call up and say, hey, what are we looking at here for closing costs prior to putting that offer? That way we make sure we address that up front.
Yeah, that's definitely a conversation you want to have too. You know, if you're not having that conversation with the lender, then you're really not putting the customer in the best situation, because you might be writing an offer, and really that's on me. I should have told the customer ahead of time. Your lender should tell you this is what you're going to need, and they should tell your realtor if we need to ask for closing costs, because sometimes when they do the pre-qualification, they assume closing costs because maybe you don't have enough income or assets to offset that, so they assume closing cost credits, but then you don't get it because the realtor was never informed. Well, then that's on the lender for not expressing, hey, we really needed this. The pre-approval was based off that. If you don't know, then you can't do your job.
Correct. So that's why I like working with local lenders, and especially working along with Jeff, because that open communication line is important versus working with banks that don't even have a presence here in the Decatur market. And lastly, so we talked about pre-approval, types of loans, closing costs. Let's talk about current lending trends. I mean, anyone who follows the news, we hear a lot about how rates are at historic lows and possibly even pushing lower.
Yeah.
How does that affect, one, buyers you're working with, and what about owners out there already? What about people that I sold a house to 3-4 years ago? What does that do for them, and does it make sense for them to look at refinancing their house?
Yeah, so rates are pushing historic lows. You know, every time you think they won't get lower, they do. If you bought a house in the last year, 2 years, 3 years, call me. I'd love to talk to you because we might be able to lower your monthly payment. We might be able to save you on the interest rate. And anytime you can save money on a monthly standpoint, but also over the life of the loan, that's the best scenario for you. So, you know, if you're in the 4s or 5s, I've seen people in the 6s still. If your rate is up there, you've got to do something. Let's call someone and let's talk about getting your rate, your payment lowered. That's the big thing is, you know, refinances are really hot right now, and you never know when the rates are going to change. So you need to take advantage of it as fast as possible.
So is there any type of, you know, extra fees to have a fixed rate or anything like that, or is everything that you're doing a fixed rate where that's going to stay there for the?
You know, with rates this low, you tend to go with the fixed rate just because it makes no sense not to. You know, we offer adjustable rate mortgages, but there's really no benefit to it in this market, especially because we're in the 3s, 4s. It just makes so much more sense to do a fixed rate, and there's no additional cost with that. You know, you'd pay the same closing costs as you would with any refinance. So it stays pretty competitive, and the refinance costs can be rolled into the loan. So you won't actually have to pay anything out of pocket unless you choose to.
Cool. So you're working with a lot of buyers right now, and a lot of people coming to you to refinance?
We're busy. We're doing everything we can to help everyone we can, and we just want to make sure that everyone is in the best financial situation that they possibly can be.
Excellent. And yeah, anything that we can do for here at Main Place, whether you're purchasing a house, considering selling to move up in size. I know we've seen that a lot this year, Jeff. I don't know if you have, but with rates being so low, it's pushed some people where if they know that they're going to need a bigger house in a few years, hey, maybe now's the time to do it while the rates are at historic lows.
Yeah, and also if you know, if you're renting, that's a big thing too. If you're renting and you're paying $800, $850 in rent, you could own for the same price. You could own for less than that. I had a couple come to me earlier in the year, and they were renting and they wanted to look at buying a house. And I said, well, what are you looking at as far as a payment? They said, well, don't want to be any higher than $600. So, okay, well, what houses are you looking at? Well, we're looking at anywhere from $15,000 to $25,000. I said, well, you're looking at a different house than your payment is. If you're maxed out at $600 payment, you're looking at houses in the $50,000, $60,000, $70,000 range. So this completely changes their perspective.
Which in the Decatur market, you can get a nice house in that price range.
Yeah, it's one of the most affordable housing markets in the country.
It is. Well, that's all the time we have today, but want to touch upon those things: pre-approval, types of loans, closing costs, and then the current lending and rate trends with Jeff Tucker at PNC Bank. And where are you located at, Jeff, in town?
2965 North Water Street's my office. It's right across from the Salvation Army thrift shop. You can get a hold of me anytime you want. I'm there as often as I possibly can be. You can also call me in my office. It's 217-424-2206.
And then contact us here at Main Place, www.mainplace.us, 217-422-3335. Thanks, Facebook community.